Hello traders, Douglas here. It's time for another entry and exit review. And of course, we're using Bookmap and the TTW Tradefinder to make these decisions. So let's get right into it. This was on June 6th. I don't remember the exact trades I took this day, so this is not going to be a review of what I did. This is going to be kind of an idealistic review of what a trader might be looking at for the day. So let's get right into it. We're looking at the open here at 8:30. Now, I don't trade the open. I usually wait 5 to 10 minutes to take any kind of action. I like things to play out. And so I can kind of get my bearings and not get fooled on the early action and feel like I have to dig myself out of a hole. So the first thing you'll notice here is this line going across. That is a dynamic sell iceberg. Okay, now these can be clues of what the big players want to do. Dynamic iceberg meaning that it took a bit for it to get filled. So they plopped in right here and price went down, crushed it again, and then finally filled it and went through. And then right after it filled that dynamic sell ice, you get the volume market stop, which is our main signal for which direction we're going to take a trade and where we hide our stops. And then you have also this big volume spike. This is all TTW detectors here. This is all part of the tool of the Tradefinder. Okay, and you need Ultra. I should say that. You need the Ultra version of the Tradefinder to get all these tools. And so it's not a big surprise that price did go down. Now, as far as liquidity is going, it's all over the place. It's up, it's down. So you don't have a major clue of, where the traders might want price to go, the institutions. The highest level is up here, just above, well, it's probably 4164 in that neighborhood. You could have a range day, price could be going in either direction, all right? So we're not heavily biased in one direction or the other. So let's skip ahead and we'll see what happens. Price comes down, it bounces off this liquidity, which is not surprising for the kind of setup that we have where we were thinking that it could go in either direction. Now it could have broke through, it could have come down to try all this, but we're not surprised that it did bounce here and come up because it's in keeping with the idea that this might be sort of a range day, at least in the morning. We come up, we hit these market stops, and we do get a sell sweep. Okay, sell sweep again. This is one order ID, so this is probably, at least in theory, this should be one player, one institution that just hit 500 sells right there, along with these volume stops. So this is a place where you might have taken a shot short, but with the liquidity here, it's probably best to wait on. This is kind of no man's land where this is happening. Okay, we're not back to, if it happened maybe closer to here, the sort of the high of the open, maybe that would have been a more ideal place to go. So this is one of those you should probably skip. If we come down here to the market volume line, we don't have any kind of divergence or anything here. There's nothing special going on. So that's probably one of those areas that you want to skip. And as you see, it comes through more sweeps, and then you get this volume stop here at the liquidity level. All right, so now a great strategy in this situation, plus on the volume stop line, you get, a peak here, and then this higher level of price gets close, but it doesn't break through. It's not quite as high as this peak back here, so maybe the buyers are losing a little bit of steam, a little bit of interest. You can hide right behind this liquidity, maybe right behind this stop for a very short stop, and your target should probably be down back to this liquidity level. That doesn't mean you'll get there, but that should be where you're thinking about going. Maybe you take some off at the halfway point or something like that, or if you get a signal that you need to get out, and we'll take a look at what happens here. So it comes down. So ideally, and this is the perfect scenario to show you how great this tool can be when used properly, is if you got in somewhere in this neighborhood, somewhere here, maybe up in here, if you're on the trigger, you can ride that all the way down. You have a predetermined target. You can ride it all the way down. There's nothing major that's happening here. right? There's like literally nothing going on as it's going down, and then it hits here. So this is probably a great place to take some off. Okay, so you get a volume stop, you get a big sweep, 772. All right, so if you want to go for the gold, you take some off there, you put a runner maybe down here to see if it's going to go fill these guys and move on beyond that. And then we get another sweep, and we get this little dynamic iceberg. It didn't stick around too long, so I wouldn't put much emphasis on that. But it does come down and fill this initial thick liquidity level. So at this point, we've also got the market volume detector down here. It's going up, so we have a divergence. We have a liquidity fill. We have 2 buy sweeps, and we have a volume stop. We have a dynamic ice that may have been beaten. So this is a good area to possibly go long if that is your bias. You know, your stop is going to be right here. You're not going to take too much of a risk. Where's your target? Your initial target, at least to 4150, possibly up to here and beyond. Okay, so we're thinking that maybe at, you know, our best case scenario is that price comes back to here. So I would put my best case target right below there. Now there's a good chance I'd exit before it gets there, but that's the best case scenario, right? Sometimes price just goes and you don't have to worry about much. All right, so it comes back a little bit, but not much. You get this. This is a volume of a single trade of at least 100 contracts that came in here. That's all I really care about is the big deals. And it was a big sell, so that might have been concerning, but the volume, as you can see, the volume detector has been traveling up, so it looks like buyers are gaining some momentum. And then basically what happens here is that dude gets trapped. All right, so now you've got a pretty good scenario if you weren't in already to get in maybe here after it breaks through this little consolidation, this little tiny consolidation. You put your stop right here. Again, first target's here, next target is possibly here, best case scenario is up here. You get a nice buyer that comes in after this seller lost. All right, nothing down here to worry about. And as you can see, we come up, we get way past our first level, and we come into the most likely level to be hit, in my opinion, and we get another big buy, but we also get a volume stop. So excellent time to take some heat off if you still have some contracts in there. But again, you're thinking that maybe best case scenario can go up here, maybe it can go on beyond. These guys pulled down here, so maybe they're thinking the price is not going to come back down. We don't really know. But you've made a whole lot of money for not much risk at this point. And this is really, for me, the biggest benefit of this tool hasn't been entries. I was never that bad at entries. The biggest benefit of this tool is holding your trades. That is unbelievably valuable, okay? You can turn your whole profit scenario on its head for the better. All right, so we do come up to our best case scenario. So at this point, even if I was holding that whole time, I'd probably be completely out at this point, okay? Because you always have a chance to get back in. And sure enough, as these buyers are coming back in, even though you're getting these volume stops, you're getting these big sweeps, you know, this is kind of a contradictory level. But if you got in here, you shouldn't be too concerned about your choice. It may or may not work out. But you do have some things in your going for you to continue going long. But then we get hung up, okay? So now that we're getting hung up, and so hopefully if you did get back in here, it wasn't up here, right? If you're going long again, you would have got long after this guy. There's a little dynamic iceberg inside of there, just a little one, and along with the big buyer. So if you got in, you know, your stop would be something like that. And so worst case scenario at this point, you haven't lost money, you know, maybe you break even or something. But you can see the price is getting hold up. This liquidity level came in here. Maybe they'll get filled, but maybe they're acting as a barrier. The market volume line is fading, so maybe the buyers are starting to weaken or lose interest. Like this could have been their, you know, they might have just unloaded all their guns right here and they're out of bullets. That's a scenario. So you're creating potential scenarios, right? This is the best you can do. You create theories and then you make plays based off those theories. And if you're wrong, hopefully you're wrong small. And if you're right, hopefully you're right big. So then we get into this. These are a lot of imbalance signals from the tool. All these little up arrows are telling you that the imbalance is long biased. And these little dots are just signaling imbalances in general. And so this is kind of what I have been calling an imbalance pullback. Plus it's back into this big level of activity. So this is where all the volume is taking place, right? Price comes back to that level of all that volume. Now it's consolidating. So you're getting traders in, you're getting traders out. You got longs, you got shorts, and it's going through here. But when I see a scenario like this, I'm not going short off of this. Okay. Even though we had these guys back here, this doesn't make me happy to go short. This is something I'm looking to break and then go long. I call that an imbalance pullback. It's something I've been working on. It's not like something that I guarantee you on. It's just something I've been monitoring. Then we get up into this interesting scenario. We get a dynamic sell ice right here. They've been waiting since way back here. All right, so they were anticipating the break of this imbalance as well. And the first trigger was here, so this is the first time you get to see it, but you do get to see where they were the whole time. They were just waiting up here for price to come back. You get another volume stop there. Another volume stop. The iceberg has been filling, so they've been holding the line. Price comes down. Now typically with these scenarios, they can push price all the way down, but if you can see it's still not filled completely. My bias is always that price will come back to fill these. Doesn't always do that, but that's always my bias. The price will want to come back to fill these, okay? So let's keep going. You get a big attempt right here to break through it. Still held the line. So this is a very powerful level right here for this ice. Comes through, breaks through it, okay? And so what's happened is now it is filled. This guy had a lot of contracts to fill. It took the market a while to fill it. All right, that's what a lot of this whipsaw action is for, is to get him filled. And he's been waiting a while to get it done and patiently waiting. Gets his final fill here. We come up, we hit a market stop. And that's basically, we get another retest of that level, like to the tick, almost. One tick short of to the tick, it looks like. So if you were hiding one tick behind here, you would have been safe. Okay, so that's all she wrote. Basically what happened was this sell ice was waiting to get sold, and once they got filled, that was pretty much the exhaustion level. After that, they were good. They were ready for the market to go down, and that's exactly what happened. So if you see something powerful like this happen, you're not looking to jump back in long, all right? You're not looking to jump back in long right away, so you got to play the scenarios and kind of have to ignore these or play them on a pullback. If it comes back and pulls back to that level, that may be when you want to get short. There's a bunch of those. Keeps going. But then you get this buy sweep, you get this buy sweep, and you've got all these volume stops. So there's a lot of volume has been pumped into here. Market starts going sideways. All right, so if you're bold, you might be starting to look long in this scenario. The market volume has been pumping up as price has been going. Now, usually when I get in on something like this, I like to see sort of a retest and then another volume stop over here, and that's when I'll get long. Okay, that's the safe play. But I will play something like this long, but I'm taking shorter profits. All right, I'm taking a shorter profit to lock it in, and then I go break even, and then I might have my target up here going for the big win. But you have to protect yourself because it could easily just dive back down and keep going. And looks like that's all I got for the recording today. So hopefully you learned a little something. That's it for me. Peace out.